Do you think Tesla stock is one of the hottest stocks today? If so, what are the other stocks worth buying according to billionaire Ron Barron? Barron is known for his years and years of experience in investing, so it will be in your best interest not to miss this one. Elon Musk says that the people who are most likely to be successful are the people who have long-termism, who think about things long-term, not now, and are optimistic. And then he says, and what you really need is people who have infinite time horizons, not tomorrow, not next quarter, infinite time rises, says Ron Barron. Ronald Stephen Barron, famously known as simply Ron Barron, is an American mutual fund manager and investor and is the founder of Barron Capital, an asset management firm focused on delivering growth equity investment solutions. Ron founded Barron Capital in 1982 and has 52 years of research experience. The buy and hold investors' $10 billion flagship fund, Barron Growth, has an annual turnover of just 3%. Ron Barron's real-time net worth is $4.2 billion. Barron Capital CEO Ron Barron recently joined CNBC's Squawk Box to break down potential investment strategies amid the market bounce off of June's lows. During the interview, Barron told CNBC, "We're investing in growth companies, so the growth companies are our hedge against inflation." In the said interview, Barron shared which stocks they are continuously buying, which include Tesla, SpaceX, and FIGS, which he called the Lululemon of healthcare. As of early August, Ron Barron still has nearly half of Barron partners in Tesla. Still, the fund's longer-term history is compelling, both with and without its Tesla stake. Barron Partners began life as a private partnership and became a public mutual fund on April 30, 2003. From then until the end of July 2022, the fund has produced a blistering 17.93% annualized return, while the Russell 1000 Growth Index has delivered an 11.6% annualized return, and the S&P 500 a 10.3% return. The fund has managed to outpace the index handily in both its pre-Tesla and post-Tesla periods. Barron first bought Tesla in the first quarter of 2014. From the beginning of that year, the fund has delivered a 21.9% annualized return through July 2022, while the Russell 1000 Growth Index has delivered a 14.46% annualized return. From inception through the end of 2013, however, when it held no Tesla, the fund's 14.78% annualized return also handily outpaced the Russell 1000 Growth Index's 9.34% annualized return. Right before Tesla first appeared in the fund, its top holdings were specialty insurer Arch Capital, energy infrastructure firm ITC Holdings, and Hyatt Hotels. The fund also held Charles Schwab, FactSet Research, and Vail Resorts, along with two private holdings, private equity firm Carlyle Group and Windy City Investment Holdings. When the fund first became public, it owned two stocks that are currently still in its portfolio, Charles Schwab and Arch Capital. Those stocks have returned 12.95% and 13.53% respectively on an annualized basis from the fund's inception to the end of July. The fund has also owned Vail since the first quarter of 2008. From the beginning of that year through July 2022, Vail has returned 12.28% on an annualized basis, beating the 11.36% return of the Russell 1000 Growth Index and the 9.37% return of the S&P 500. Right before buying Tesla, which soon became Barron Partners' largest holding, the fund's biggest position was a 10.02% allocation to Arch Capital on December 31, 2013. Positions in the fund, which typically holds around 30 stocks, have been in the double digits before. For example, at the end of 2013, ChoicePoint was an 18.57% allocation and Wynn Resorts was 14.91%, but none have been close to the current allocation to Tesla. Ron Barron has said that he anticipates Tesla will produce 20 million cars in a decade. Currently, the firm produces around 1 million, and the top two car companies in terms of cars delivered, Toyota and Volkswagen, produced less than 20 million combined in 2021. That's that for Barron and Tesla, but it does not end there. Barron is also bullish on another company led by Elon Musk, SpaceX. In late August, billionaire Ron Barron recently invested $100 million in SpaceX and thinks his Tesla holdings will return 3 to 5 times in the next 10 years. The founder and chief executive of investment management firm Barron Capital told CNBC that they also invested about $100 million in FIGS, which he called the Lululemon of healthcare in recent months. The investments in SpaceX and FIGS, a maker of hospital scrubs, mark his biggest moves lately. He said, Barron has participated in SpaceX's previous fundraising rounds. Meanwhile, SpaceX recently announced a joint venture with T-Mobile on Twitter intended to increase connectivity. Barron also said that he has bought shares of Hyatt, Vail Resorts, and Red Rock Resorts, expressing bullishness on the travel sector. A noted Tesla bull, he estimated that he has made about $6 billion to $7 billion on shares of the EV maker from his initial investment of $380 million in 2014. He added that he expects his fund to make another 3 to 5 times its money on Tesla in the next 10 years. In the next 10 years, I think that Tesla is going to be the largest company in the world, and in the 10 years after that, I think it will be challenged by SpaceX, he said. Overall, Ron Barron has been buying stocks from Elon Musk-led Tesla and SpaceX, maker of hospital scrubs Figs, and Hyatt, Vail Resorts, and Red Rock Resorts in the travel sector. In an interview a few months back, Barron was asked about what he looks for, given that he is a master of growth investing, which involves finding companies with prospects for faster than average profit growth, among other measures. He said that everyone can understand what a growth company is, but what is hard for most people is being able to understand competitive advantage, which he deems as the most important thing. That's something you can't figure out with an algorithm. You need to understand a business, how it operates, and what makes it difficult for others to compete, says Barron. Barron referred to Tesla as an example. He said, Tesla's competitive advantage is in its culture of rapid innovation. Tesla has a 10-year lead making batteries and electric cars. It has revolutionized an entire industry. We make investments on the basis of what we think a business will be worth in 5 or 10 years, as opposed to what it's worth right now. Our goal has been to double our money about every 5 or 6 years. We have been able to accomplish that by investing for the long term in businesses that we believe are competitively advantaged and managed by exceptional people. We worry about businesses, not about stocks and stock markets. Barron was also asked whether he ever holds onto stocks that underperform for a few years, and he said yes. He explained that that is often the case, and Tesla is one example. He shared that his company invested $380 million in Tesla from 2014 to 2016. He added that although they believed they could earn 20 times their money over 10 years, they regarded it as a risky investment at the time. So they invested less than 2% of their firm's assets in the stock. He said that it was considered risky because manufacturing cars is a highly regulated, capital-intensive business, and few thought Elon Musk's electric car business would be successful, especially because financially powerful car companies and their dealers and unions, oil companies, hedge funds, and politicians were aligned against this business. During the following 5 or 6 years, Tesla's sales increased tenfold. Its share price, however, although extremely volatile, changed little over most of that period. We were right, and Tesla's sales have continued to increase dramatically. From 2019 to 2021, Tesla's share price increased about 20 times, and we have earned about $7 billion on our initial investment. We expect it to make at least 3 to 5 times our money again over the next 10 years, Barron said. In a CNBC Squawk Box segment, Barron Capital CEO Ron Barron said that he plans to hold Tesla stock for another 8 years at least. I think we're going to make 3, 4, 5 times our money on Tesla from here, Barron said in the said interview. Billionaire investor Ron Barron, whose fund has already made $6 billion on its original Tesla investment, expects the shares will continue to skyrocket for the next 10 years. Barron explained that he invested $380 million in Tesla between 2014 and 2016 at an average price of around $40 a share, so his return is about 20x so far, or about $6 billion. Barron has sold about $1 billion worth of stock in the 2 mutual funds that own it to diversify the portfolio. Tesla now accounts for about 12.8% of its fund's assets under management. He said, "I think for Tesla, this is the very beginning of what they're doing." In fact, in an interview with CNBC in 2018, the billionaire investor said that the electric car maker could be a $1 trillion company in revenue by 2030. Make sure to subscribe to this channel for more information on the financial industry like this one.